Welcome back, everybody, for another deep dive.
Yeah.
Today, we are going to be looking at Hedge Fund Market Wizards.
Okay.
And it's a book full of interviews
Yeah.
with some of the world's best traders and investors.
Absolutely.
And we're going to be trying to glean some insights from their stories
Of it.
and see what we can apply
Yeah.
to our own trading and
It's
investment.
for our own journeys. Exactly.
Exactly.
Yeah.
So we're going to be looking at direct quotes
Okay.
and summaries from the book.
Perfect.
So we're not adding anything new in, just
Yeah.
trying to get the cream of the crop.
The good stuff.
Yeah, and break it down and see what,
Distill it.
distill it down to the essential elements.
I love it.
So one of the most interesting things about this book
Yeah.
is right out of the gate,
Yeah.
it challenges one of the most fundamental concepts in finance, and that's the efficient market hypothesis.
The efficient market hypothesis, right?
Right.
Inherently, these traders, in order to make the kind of returns that they've made,
They're kind of bucking that trend, right? Or
Uh.
bucking that idea, I should say.
yeah, because, I mean, if markets were truly efficient,
Yeah.
then
Company-
there wouldn't be these massive outliers
Right. You'd be indexed.
like there are in this book.
Yeah, and, Jack Bogle would be
Right.
everyone's hero,
Right.
but clearly there's more to it.
Yeah. So, I mean, is it just an academic debate or
Okay.
is there something more here?
I think there's definitely something more here, and I think the fact that these traders have put their money where their mouth is and consistently beat the market
Right.
shows that they are onto something.
Yeah.
There's a story in the book about a trader who was buying stocks right after the 1987 crash.
Wow.
And his broker was like, no one is buying. He was shocked.
Wow.
But this trader was able to capitalize on that mispricing in the market
Right. And so he was being contrarian
Abs-
at a time when everyone
at a
else
time when everyone else was panicking.
was fearful.
Yeah. Do you think that contrarian spirit is essential for success in the markets?
You know, I think it's definitely a recurring theme in the book.
Okay.
These traders aren't afraid to go against the grain.
Yeah.
They understand that markets are driven by humans.
Right.
And humans have emotions and biases.
Right.
And that can create opportunities.
If everyone's thinking the same way,
Exactly.
that creates the opportunity
Yes.
for the person who's thinking differently.
100%.
It reminds me of what O'Shea said
Yeah.
about the 2008 financial crisis.
Yeah.
He questioned
When it actually began.
when it actually began, yeah.
Yeah.
Because markets don't think like computers.
Right. And he made the observation that while markets are driven by humans,
Yeah.
humans aren't computers.
Right.
So we don't think linearly.
Right.
And to try and pinpoint a specific moment is almost impossible.
Yeah.
But understanding those shifting conditions is key. And he
Yeah.
actually ended up shifting from a bearish stance to a bullish stance in 2009,
Interesting.
despite his initial pessimism.
Wow.
So he really recognized that his initial view
Yeah.
was not going to play out the way he thought it would.
So he was willing to adapt
Absolutely.
to the new data.
And I think that is really key for a lot of these traders,
Yeah.
that they're constantly learning, they're evolving,
Yeah.
they're changing their strategies as
They're not stuck in one dogma.
they're not stuck in one dogma. Exactly.
Yeah.
But on the flip side of that,
Yeah.
one thing that I noticed throughout the book
Mm.
is the emphasis on risk management.
Okay.
It's almost as if it's like the foundation upon which their success is built.
That's a great point because it's not just about making money.
Right.
It's about
Keeping it.
keeping it. Yeah.
Preserving your capital.
Exactly.
Yeah.
And the book highlights all sorts of different approaches
Yeah,
to risk management.
for sure.
And they're all kind of tailored to
Yeah.
the individual trader.
Yeah. To their style, to their personality, to the markets they trade.
Right.
There's no one-size-fits-all approach.
Right.
But for example,
Yeah.
one trader, Ed Sakota, he has a 1% risk limit per trade.
That's very strict.
That is extremely strict.
Yeah.
But it forces you to be incredibly selective about your trades.
Right.
It highlights a mindset shift. It's
Yeah.
not about making money on every trade.
Right.
It's about staying in the game long enough
Right.
to capitalize on those rare, truly great opportunities.
It's like saying I'm okay with being wrong a lot
Yeah.
as long as I'm spectacularly right
When it matters.
when it matters.
Exactly.
But not every trader is that strict with their risk limits.
No, not at all.
Okay.
There are other approaches like Blue Crest.
Okay.
They have a rule of cutting exposure in half after a 3% loss
Mm.
and then completely exiting a trade after another 3% drop.
Wow. So that's like a
That's a very strict drawdown rule.
Yeah.
And it really incentivizes traders to be extra cautious at the beginning of the year
That's interesting.
because it means they have to earn the right to take on more risk as the year goes on.
Oh, that's an interesting way to look at it.
It's almost like a built-in reward system
Okay.
for good performance
Gotcha.
and limiting the downside risk.
That's a great point, yeah.
Yeah.
But all this talk about risk management and rules and stuff,
Yeah.
does it make trading sound a little bit too mechanical?
Right.
What about the role of intuition and experience?
That's where things get a little bit more nuanced.
Okay.
You can't really quantify intuition.
Right.
But a lot of these traders, they have a knack
Yeah.
for sensing those subtle shifts in market mood.
Okay.
They've seen it all. They know how to interpret the clues
Yeah.
that most people miss.
It's like they can feel the change in the market,
Exactly.
even if they can't put their finger on exactly why.
Yeah, there's a great story in the book about a trader who could just feel that a change was coming, even though he couldn't pinpoint the reason.
Yeah.
And Joe Vidich has a really unique perspective on sentiment.
Okay.
He views it as a direct indicator, not a contrarian one.
Interesting.
So, for example, if the market reacts more positively than expected to news,
Yeah.
he sees that as a bullish sign, which is the opposite of the commonly held belief that extreme sentiment is a contrarian indicator.
Right. So he's looking at it as a confirmation?
Yeah, he's looking at it through a different lens
Interesting.
than a lot of other people.
That's a fascinating perspective.
It is.
Yeah.
It is.
So how do you reconcile this data-driven approach
Right.
with this almost instinctual
Right.
understanding of market psychology?
It seems like a delicate dance.
Okay.
Some traders lean heavily on the quantitative analysis.
Right.
Others rely more on their experience and intuition.
Yeah.
But I think the key takeaway is that it's not about choosing one over the other.
Right.
It's about finding what works for you. It's about developing your own feel for the markets.
Gotcha.
Yeah.
That makes sense.
Yeah.
Speaking of understanding market dynamics,
Yeah.
one of the stories that really stood out to me was this trader
Yeah.
who profited from the 1998
Russian crisis.
Russian financial crisis. Yeah.
It's amazing how he was able to connect those dots
Yeah.
that others missed.
It's like he was a financial detective.
100%.
And he really saw through kind of the
facade.
the facade, yeah,
The mainstream narrative.
the mainstream narrative.
At the time.
Yeah, he saw the official numbers coming out of Russia
Right.
saying that they had a current account surplus.
Right.
And
But their reserves were dwindling.
reserves were dwindling. Yeah.
Despite supposedly strong capital inflows.
Right. So how do you have a current account surplus?
Right.
But dwindling reserves.
Yeah, it doesn't add up.
It doesn't add up.
And he also knew that during the Yeltsin years, there was rampant theft of company assets. So he knew that something was deeply wrong. Wow.
And he wasn't swayed by, the prevailing narrative at the time.
He trusted his own analysis.
He trusted his own analysis.
Yeah.
Even when it meant going against the consensus.
It makes you wonder how many so-called sure things out there are actually
Houses of cards.
houses of cards, yeah.
Yeah.
Built on shaky ground.
And it seems like all these traders, they share this common trait,
Yeah.
this willingness to question assumptions.
Absolutely.
But another thing that struck me was how many of these traders
Yeah.
are essentially one-trick ponies.
It's a recurring theme, isn't it?
Yeah, they find what they're good at,
They find what they're good at.
what they understand,
And they stick to it.
and they stick to it.
Yeah.
Like the book mentions a trader who was really good at reading order flow
Right.
information.
Yeah.
And when he left that environment, he just couldn't replicate his success.
He lost his edge.
Yeah. What do you make of that?
I think it's a powerful lesson in knowing your edge. It's not enough to be smart or hardworking.
Right.
You need to understand where your true advantage lies.
Right.
And exploit it ruthlessly.
You need to know what you're good at.
You gotta know what you're good at.
Yeah.
And focus on that.
And it seems like specialization is key.
I think so.
Yeah.
By focusing on a specific area, you develop a deep understanding
Yeah.
that allows you to see opportunities that others might miss.
It makes you wonder if sometimes we spread ourselves too thin.
Right? Trying to be a jack of all trades.
Yeah. Trying to be good at everything
Yeah.
instead of mastering one thing.
Instead of mastering one thing.
It reminds me of Joel Greenblatt and his magic formula,
Ah, yes. The magic formula.
where he basically boiled stock selection.
Down to two key metrics.
Down to two key metrics, yeah.
Yeah.
Return on capital.
And earnings yield.
And earnings yield.
Yeah. It's a brilliant example of simplifying the complex, cutting through the noise,
Right.
and focusing on what truly matters.
Finding good businesses at bargain prices.
Finding good businesses at bargain prices. Exactly.
But his story also raises this interesting question of, how much of success in the markets is quantifiable versus this intangible element of intuition.
Yeah. Where does that balance lie?
Yeah. Where does that balance lie?
It's a tough question.
Yeah.
It seems like a lot of these traders, they've found a way to blend the two.
Okay.
They use data and analysis to inform their decisions.
Yeah.
But they also rely on their experience and gut feel to guide them.
And so it's not one or the other.
It's not one or the other. It's both.
It's a combination.
It's finding that right mix for you.
It's almost like they've developed this sixth sense for the markets.
That spidey sense.
Yeah.
Yeah.
And I think a lot of that just comes from years of experience.
Experience making mistakes.
Yeah.
Learning from those mistakes.
Right.
Refining their approach.
It's a journey.
It's a journey. It's not a destination.
Yeah. And the book mentions one trader who actually turned down a job. And then later realized that he was essentially giving up on his dream.
Right.
And he was able to kind of align his emotional side with his mental side.
Get those two in sync.
Yeah, and make the right decision for his long-term goals.
It's a reminder that trading is as much about psychology as it is about analysis.
That's a great point.
Yeah.
Okay, so we've spent all this time talking to these market wizards.
Yeah.
Picking their brains, trying to understand their strategies, their mindset.
Right.
But how do we take all this wisdom and translate it into actionable steps?
Yeah. How do we bridge the gap between theory and practice?
Right.
That's the million-dollar question.
Yeah, because it's one thing to read about it.
Yeah.
It's another thing to actually apply it.
Exactly. And I think one of the things that this book does so well is it provides us with those practical insights.
Okay.
It's like we're getting a masterclass in trading, but instead of rigid rules, we're getting these principles, these adaptable strategies.
Okay.
And the goal isn't to mimic these traders exactly, but to learn from their experiences and develop our own approach to market mastery.
Right. We're not looking for a paint-by-numbers system.
No.
We're looking for a framework for thinking about the markets and making decisions that align with our own goals.
And our own risk tolerance.
And risk tolerance, right?
Yeah.
And one of the most powerful frameworks that I saw throughout this book was the emphasis on controlling what you can control.
100%.
You can't predict the future.
No.
You can't control what the market's going to do.
Nope.
But you can control...
You can control your actions.
Yeah, your actions and your reaction.
Your reactions to those events.
To those events,
yeah.
And that starts with having a well-defined trading plan.
Absolutely.
Right.
You need to have rules that guide your decision-making.
Yeah.
Especially when emotions are running high.
Right, because in the heat of the moment, it's easy to make a decision.
You can make bad decisions.
Yeah, that you'll regret later.
Yeah, absolutely.
So it's like having a prenup.
Yeah, a prenup for your trading account.
For your trading account, yeah.
I love that.
But it's not enough just to have a plan, right?
Yeah.
You also need the discipline.
The discipline to stick to it.
To stick to it.
Yeah.
And that can be really tough.
It can be really tough.
Especially when you're staring at a screen full of red numbers.
So when you're in a drawdown.
Yeah.
Yeah, it takes mental fortitude.
It does.
And that's where the mental game comes in.
Okay.
The ability to manage your emotions,
Okay.
to stay calm under pressure,
okay,
and to avoid those psychological pitfalls that can sabotage your success.
So we're talking about like the FOMO, the fear of missing out.
Fear of missing out, the tendency to chase losses.
Yeah.
Revenge trading.
Yeah, all that stuff.
All of that.
Yeah.
And the opposite, okay. The fear of losing your profits. Right. Taking profits too early.
Yeah.
Yeah.
So how do you stay grounded amidst all of this chaos?
Well, I think it goes back to what we were saying about having a plan.
Okay.
Having rules.
Yeah.
But it's also about constantly reminding yourself of your long-term goals.
Okay.
Focusing on the process.
Yeah.
Not the outcome of each individual trade.
Right, because if you get too caught up
Exactly.
And the day-to-day fluctuation.
You're going to lose sight of the bigger picture.
You're going to go crazy, yeah.
Yeah.
The book tells a story about a trader who used to
get caught up in these vendettas against the market.
Right.
Like he was trying to prove that he was right.
Yeah.
Even when it meant digging himself deeper into a hole.
That sounds like a bad idea.
It is a bad idea.
Yeah.
And he realized that holding on to those grudges
yeah.
was only hurting him.
Right.
It was more important to adapt to the market's reality.
So what is?
Yeah, than to try and bend it to his will.
To try to force it, yeah.
Exactly.
So sometimes you just got to accept that you're wrong.
You got to be humble.
Yeah.
You got to be willing to admit that you made a mistake.
Yeah.
And change course.
It's a tough pill to swallow.
It is.
But it's necessary.
It's necessary for long-term survival.
Yeah. And what's so inspiring about these traders is their resilience.
Yes.
You know, they all faced challenges.
They've all made mistakes.
They've all made mistakes.
But they learn from them.
Yeah.
And they came back stronger.
They've developed this anti-fragility to the market.
To the market's ups and downs.
Yeah.
They don't just survive those setbacks.
Right.
They use them to grow and evolve.
So it's not about avoiding failure.
Yeah.
It's about embracing it.
Embracing it as a learning opportunity.
As a stepping stone.
As a stepping stone to something greater.
So if we were to kind of distill all this wisdom into a few key takeaways.
What are the most important lessons?
The most important lessons, yeah.
I would say, first and foremost, focus on what you can control.
Okay.
Develop a solid trading plan.
Yeah.
Manage your risk meticulously.
Okay.
And master your emotions.
Okay.
Don't let fear or greed dictate your decisions.
Right. It's about becoming the CEO of your own portfolio.
Of your own trading journey.
Yeah.
Yeah.
Secondly,
never stop learning.
Okay.
Never stop adapting.
Okay.
Markets are constantly evolving.
Right.
So what worked yesterday might not work today.
Yeah.
Be open to new ideas.
Yeah.
Challenge your assumptions.
Okay.
And always be willing to refine your approach.
So it's about becoming a lifelong student of the markets.
Yes.
Yeah.
Always seeking to improve your skills and knowledge.
And finally,
trading is a marathon.
Okay.
Not a sprint.
Not a get-rich-quick scheme?
No. There will be ups and downs, wins and losses.
Right.
But it's the long game that matters.
Right.
Stay focused on your goals.
Yeah.
Be patient.
Okay.
And never give up on your quest for market mastery.
That's great advice.
Thank you.
Yeah, this has been another awesome deep dive.
It has.
So many great insights.
So much wisdom.
But remember, it's not just about the information.
Right.
It's about what you do with it.
Exactly.
So take these insights,
apply
them to your own trading.
Yes.
And see where this path
the path of market mastery
leads you.
Exactly.
Until next time. Happy trading, everybody.
Happy trading.